What's going on YouTube? Chris here. I want to bring you all an update today of Bitcoin. Right now we're sitting at $10,305. We're down 1.35%. What I want to do is look at Bitcoin on the 4-hour time frame. So we're going to be looking at patterns with this 4-hour time frame. It can really help you identify the patterns and trend line breaks. It can really help you. It's something that I like to do, and I just wanted to bring that to your attention. A lot of times I like to play cryptocurrency when I'm trading on the 1-day time frame, and then for entries and exits, what I'll do is try to drop down into that 4-hour time frame and get a little bit more detailed, sometime even down into the 1-hour time frame. But what I wanted to look at today was out of this white trend line that we had been up in for roughly, guys, what I wanted to do here was do a price date range for us. I want to take us sideways to where we're at right now. And right now we have been moving up for about 184 days. And what happened was we had a trend line break, and that took place roughly at about 172 days in this uptrend. So from when we had our major dump to when we had this trend line break was 172 days. I think that's significant, and typically when you have a trend that runs for that long, if you have a trend line break, you're going to get a retest of the trend line. It doesn't always have to happen, but a lot of times it will. And when it happens, it'll be typically take about 9 to 14 days after the trend line break before you go back up there and test that. And for us to go back up and test, that would put us up around $11,500, right in that range. Okay, and that would be a nice trade if this is an area where we still can find support and then get a nice little move to the upside. Because if we zoom in here, which I'll do in a moment, the 0.618 is at 10,190. And this fib that I'm doing a micro fib here off the bottom that we had to our high of the last impulse wave that we had. We had retraced back to that 0.618. You can see a lot of defense here, and that was all the way down around 9,816. So a little bit below the 0.618, but we've been trading up above that. Okay, and now what we're trying to do today, we're trying to hold that as support. So we've gotten up above it, and we've seen a little bit of rejection, and now we're trying to find that as support. If we can find that as support, a lot of times the 0.618 move will go to the 0.382, and that'd be at $11,000. So what we're looking for is increased volume with this. If we zoom in and take a look here at the volume that's coming in just recently, we had a nice little stick of volume above average volume, and you can see we were defending this 0.618 right here. Came on a little bit more volume as well. We previously had pushed up over top of this 60 moving average, and people have asked, why do I like to use the 30 and the 60? The cryptocurrency market's open every day. It never stops, 24/7, and typically there's 30 days in a month. So I like to basically get the whole representation of the month, because a lot of the times in uptrends you will stay up above, and talking about the 1-day time frame, a lot of times in uptrends you'll stay up above that 30 EMA most of the time, sometimes longer wicks down to that 60 as well. I also look at the 50, I have the 100, the 200, all that type of stuff, but I really like to use this method because of the retracements that take place in this market. It's a really good one, and typically you can see up here when we had this red cross, look what happened to the price. When you've had this green cross back here, look what happened to the price. Just looking at these things can really help you. So now we have to get back up through those moving averages, and on this Fibonacci here, if we can hold the 0.618, now we have to get back up through that 0.5, and that's going to be at $10,594 for overhead resistance. If we take a look in here on TradingView, for the technicals, we have a 16 sell, 10 neutral, and a 2 buy. Oscillators 2 sell, 9 neutral, and 0 buy. Moving averages pressing down upon us. So that's why I said this is a sticky spot, and this is why we need more volume to take place in these areas, because now we're fighting this trend. Okay, right? If we want to continue a move to the upside here, we're having these moving averages acting as overhead resistance. They're not acting as support like they were over here. So now we're swimming a little bit against this short-term trend if you are taking longer positions in this area, right? And this is stuff you want to pay attention to, because typically the impulse waves when you're changing trends, like this here, how we had heavier volume, the reaction now that we're looking at, we're paying attention to the volume, and it's a little bit lower here. That's why it's important that soon, if we're going to continue this little uptrend that we've been in here, we need to keep this moving to the upside and start getting over critical areas, you know, over $12,000, up above that $12,500, and get this thing moving. And that's going to take a lot of buying pressure. So this is where you really need to watch to see if we're going to get this type of stick of volume here. If we don't, and these areas aren't really supported, then we can start looking down at some lower levels. You know, I'd go even to the 200 moving average if we go out to the 1-day time frame here and take a look at this. The 200 moving average would be down around $9,000, $9,100 if we do have a drop down through that area. Now, if I pull the Fibonacci off here and just give you a better look at the moving averages. So we're below the 30, we're below the 60. Today we are fighting to stay up above the 100 moving average. We're still holding that 200 moving average. So if we did have a further drop down through that 98.16, I'd look down at that 200 moving average, see if we can get some type of a bounce off that. But when I look at these, guys, I really like to pay attention to trend lines. I mean, you can see this last one, this downtrend that we are in. And then we have that nice move to the upside, a nice trend line break to the upside. Trend line breaks can be very significant. And it's important now, if the bulls want to keep this going, that we go back up and test this trend line and even get back up within this trend line and get over top of this little head and shoulders pattern that was formed. So it's important for the bulls to start stepping in today. You can see there's been a lot of fight between the bulls and the bears, a lot of short day candles up in that area trying to fight for that 100 moving average. So if you get something from this, guys, don't forget to like, subscribe, hit that notification bell, really watch these areas. God bless, my friends.